Are you tired of trading strategies that sound great in theory, but fall apart once you put real money on the line? The difference between professional traders and amateurs often comes down to one critical step: backtesting. I'm Barry, a financial technician, and in this video, I'll take you inside the world of backtesting, what it is, how it works, which tools to use, and how to avoid the traps that ruin most strategies. Please stick with me, because by the end, you'll know exactly how to turn your ideas into tested trading systems ready for live markets. Backtesting is the process of applying your trading strategy to historical market data to see how it would have performed. Think of it as a time machine. You define your rules. Maybe it's buy when the price crosses above the moving average, sell when it drops below. Then you run those rules across years of past price action. The result? A crystal clear picture of whether your idea had merit, or whether it would have drained your account. The big benefit is confidence. When you know your system survived bull markets, bear markets, and sideways conditions, you can trade with conviction. Without backtesting, you're basically gambling. The first thing you need is quality historical data, clean price, volume, and even fundamental data depending on your strategy. If your data has gaps or errors, your backtest results are meaningless. Next, you need the right software. Here are my top 3 picks. TrendSpider, my #1 recommendation for most traders. It has an easy point-and-click backtester, no coding required, plus powerful visualizations. You can backtest moving averages, RSI, Bollinger Bands, or custom conditions in minutes. TradingView, incredibly powerful and flexible. With PineScript, you can code custom systems, run them over decades of data, and refine with hundreds of indicators. It's ideal if you want to get deep into strategy design. FinViz Elite, perfect for scanning and quick backtests. It lets you test over 15 years of data and compare stocks, sectors, and timeframes quickly. The tool you choose depends on how hands-on you want to be. TrendSpider for no-code backtesting, TradingView for coding flexibility, FinViz for fast analysis. Let's walk through a simple example. Suppose you want to test a moving average crossover in TrendSpider. You open the strategy tester, go to entry condition, then add script, then add parameter. From there, select condition, choose price, and set it to greater than moving average. For the sell condition, you repeat the process and set it to price less than moving average. Once you click run, TrendSpider instantly shows your profit, win-loss ratio, drawdowns, and a chart of where the trades were triggered. In TradingView, you would write a short PineScript to define the crossover rules and run it across different timeframes. FinViz takes a broader approach, letting you quickly filter and backtest stocks against your chosen criteria using years of data. Now here's where most beginners go wrong. Curve fitting happens when you over-optimize a strategy so it looks perfect on past data but fails in real markets, so keep your rules simple. Ignoring costs is another mistake, because commissions, spreads, and slippage can quickly erase profits. Survivorship bias is also dangerous. If you only test stocks that survived and exclude those that went bankrupt, your results will look better than reality. The key is to keep your backtest as realistic as possible, or your system will collapse in live trading. When analyzing backtest results, don't just focus on net profit. Pay attention to risk and consistency. The Sharpe ratio shows how much return you earn for each unit of risk. Maximum drawdown measures the largest loss from peak to trough and tests whether you could handle it. The win-loss ratio and expectancy reveal how often you win and whether wins outweigh losses. CAGR, or compound annual growth rate, shows the true annual growth of your account. Together, these metrics reveal if your system is truly robust, not just profitable on paper. So you've got a strategy that looks good. What's next? First, don't jump straight into live trading. Start with paper trading. Run your strategy in real time with no money at risk. That shows you how it handles slippage, spreads, and volatility. Once it proves itself in paper trading, you can cautiously scale into live trades. But remember, markets evolve. Keep testing, optimizing, and adapting your strategy to stay ahead. Want to try this yourself? I've partnered with my top-rated platforms to get you exclusive discounts: TradingView, TrendSpider, and FinViz. You'll find the links in the description. It's the best way to start backtesting today while supporting this channel. To wrap up, Backtesting is the trader's edge. It transforms ideas into data-driven strategies, filters out bad systems, and prepares you for live markets. With the right tools, quality data, and discipline, you can build strategies that survive the test of time. If you found this video helpful, hit like, subscribe, and check out the exclusive partner discounts below. Thanks for watching, and I'll see you in the next video.